Joining us exclusively to talk about everything that's been going on there, everything that's been announced so far. In particular, this, I wouldn't say renewed vigor, but just this resurgence again of interest in private markets. Joining us here on set is Hartley Rogers, Executive Co-Chairman at Hamilton Lane. It's very nice to see you and good morning.
Great to see you, David.
Nice to see you. Thank you for carving out a piece of your time. I know you stepped out from what's going on inside. It's been a fantastic few years for your asset class.
Yes.
Have you had to turn money away at this point? Are you closing the door? Like, how good have things been? How much growth have you seen this year?
Well, I think we've seen a fair amount of growth from some channels. I wouldn't say we've had to turn money away, but we certainly are prudent in how we invest the money. You have to be careful that you're balancing the inflows with investment opportunities that you're seeing across the different things that we do.
I mean, you guys just reached a key milestone, which is $1 trillion in assets here right now. What gives you confidence that this boom in private markets, for example, can continue?
Well, I think, first of all, private markets have been around for a long time, and they've proven themselves over decades as being a great way to invest and a great ownership structure for certain kinds of companies. Not everybody, but for certain companies. And so we believe that the fundamental reasons why private markets work are still there and will continue to work for the foreseeable future, especially as economies grow and develop, as you're seeing here in the Asian region.
Where are you seeing the fresh money coming from? Are you seeing new types of clients? Is it more the sovereign types? Are you seeing family offices, which we hear a lot about here in this part of the world?
Yeah, today it's really coming in a couple of places, mostly from families, wealthy individuals, and then pushing down into democratization in the form of things like defined contribution pension schemes, saving schemes, and things like that. I think for years, private markets have been the province of sophisticated institutions, endowments and sovereign wealth funds, big pension funds. We see that now changing as they're being made more broadly available to other people. Tokenization is a very important part of that. And that's something we've been talking about here on this conference.
We've also seen some trends, right, where a lot of LP-led sort of deals are being made here in Asia. What do you make of that sort of trend right now?
Well, I think the secondary markets in private equity are very substantial and growing. As you've had an asset class whose net asset value has gone in the last 20 years from something like $500 billion to something like $12 or $13 trillion, you naturally have a lot more ability to shape and customize portfolios, including by vintage, going back in time. And so LP-led secondaries, which I think is, Yvonne, what you're talking a little bit about, is definitely something that people are using more and more.
What about this trend of just reducing exposure to the U.S. dollar? Like, how is that resonating the most this year for you guys?
Well, I think people are wanting to have global portfolios. Private markets forever have been a U.S.-led phenomenon. So going back in time, it's been kind of 70% U.S., 20% Europe, and 10% rest of world has been sort of how the asset class has looked for 25 or 30 years. I think as Asia continues to grow, all the different opportunities here, the more sophisticated way that people are acting and investing and thinking, I think people are going to want to be more exposed to the growth opportunities in Asia.
Over in the U.S. where you're based, Hartley, there has been some cracks that are emerging, right? When you take a look at the likes of First Brands and the like, is this something that you think is just a one-off that we're seeing in private credit markets, or do you think there is some sort of systemic risk now?
We do not see a systemic risk today, no. We think that these are one-offs. They're being greatly magnified by the media and by people who have a kind of vested interest. Not saying that the media necessarily has a vested interest.
But you're not pointing to us, are you?
I'm not pointing at you. But the people who are talking about it, there are some vested interests in making this feel like it's unstable. If you look at the situations that have been focused on in the press, they're not deals that are sponsored by private equity firms by and large, and this kind of thing does happen. They're not actually that big when you look at the grand scheme of everything in private credit. And in our private credit business, we really have not seen anything like this happen.
Right. I guess that really comes with how wide and broad the spotlight has become in the asset class. I mean, you will be seeing things like this. I want to ask you then, in terms of opportunities in China, we talked about this during the break before we came back live. What are you seeing in China as far as a deal sourcing perspective and also the amount of money that wants to come out of China looking at deals elsewhere?
China is obviously a very important economy, and it's a very important market for any firm that wants to be a global firm in these asset classes. It also, as the economy is recovering, as you've had Hong Kong it being so vibrant and kind of opening up to the world, tremendous stock market performance, lots of IPOs. It's really the gateway, in a way, a gateway in and out of China. And so I think you're seeing a lot more interest in Chinese deals today than you've seen before, as the economy is sort of stabilizing and people are looking at it.
Are there certain sectors or industries where you think that a lot of those deals are concentrated?
Well, I think in private markets, the biggest part of private markets worldwide is buyouts.
Okay.
And buyouts is sort of a phenomenon of a
we had
more
Starbucks just recently.
Yeah, like Starbucks.
Okay.
A more sophisticated, more mature economy where there's an ownership structure in private markets that could be appropriate for a company. It could be a founder-led company that maybe the founders are getting older. Maybe the children don't want to be in the business and they're deciding they want to professionalize it, bring in outside ownership. That's a wonderful opportunity for private equity. It's also true in corporate carve-outs. If you have companies that have grown and grown, they have different kind of non-core businesses, maybe the management team is thinking, maybe we don't need to be in all these businesses. There's a better ownership structure for some of them. Yeah. And so in any kind of big economy, China, Japan, you're seeing it more in Korea, you certainly saw it in the US and Europe. You have opportunities in driven by both of these phenomena.
How are you looking at exits now, given that we are seeing bull markets in much of this region right now, too?
Well, I think that it's great that the IPO market in Hong Kong has come back. I think that's obviously a critical exit for a lot of private equity markets. I think the U.S. has seen some good IPO activity this year as well. So it feels to us like you're beginning to see the exits come back in to the private equity market. It's been slow for a few years. Really, in a way, the hangover from COVID with the inflation and then the interest rate rises, which kind of dampened activity. I think you're now beginning to see that loosening up.
Hartley, it's great to have you here.
Thank you.
In the region. Hartley Rogers there, Executive Co-Chairman at Hamilton Lane, joining us here, of course, at the HKMA event.